Hi everyone, in this video you will learn about the first financial statement that we will cover in this course, the balance sheet. The balance sheet is a really important financial statement as it shows an individual or business's financial position. However, before I tell you about the balance sheet, we're going to determine your financial position first, and then I'll show you how to organize that information into a balance sheet. To begin, what I want you to do is pull out a sheet of paper and divide that page in half. Once you have done so, on the left side of the page, make a list of the items that you own that have a monetary value. So things like your car, house, property, jewelry, your bank balance, and so forth. Once you have a list of the items along with their value, total it all up at the bottom. Then do the same thing with items that you owe that have a monetary value, such as a mortgage, a bank loan, a student loan, money that you owe someone, and so on. Once you have both totals for each column, calculate the difference between the right column and the left column and record that at the bottom. Here's an example of one that I did. On the left, I listed everything that I own along with its value, and on the right, I listed everything that I owe. Then I found the difference between the two sides. Take time to do this. Pause the video if you need to. Now what I have here shows me how much money I actually have and how much I'm actually worth by calculating the difference between those two sides. Even though I have 66,000 as of this moment, I'm not actually worth that much money because of the money that I owe others. So really, I have 65,000. The left side of this chart shows my assets, or everything that I currently own that has a monetary value, while the right side of my chart shows my liabilities, or the amount of money that I owe. While the difference between my assets and my liabilities shows the true worth, or my capital. Here are the terms that I just covered again. Assets are the items that you own or are owed to you and have a monetary value, such as your house, jewelry, property. Liabilities are items that you owe to others and have a monetary value, such as a bank loan, a student loan. And owner's equity, or your net worth, or also known as capital, is the difference between your assets and your liabilities. It is how much money you realistically have and how much you are actually worth. Owner's equity is represented by an equation called the accounting equation. Let's look at the first equation here. Assets minus liabilities equals owner's equity. This is exactly what we did in our chart back here. We subtracted our total items owed from our total items that we own to find how much we are worth. The second equation here is also very important. However, we're going to skip over it for now as it will be relevant later in this video and more so in section 2.3. Before we move forward, we're going to do another quick activity in your notebook. We're going to calculate the net worth or owner's equity just as we did before. Let's take a look at this case right here. Claude, a factory worker, asks you to help him figure out how much he is worth. From a discussion with him, you find out he has a bank balance of $754. He owns a home valued at $82,500 and has a mortgage on it of $12,500. He owns furniture in the house valued at $16,000. He has an unpaid bill of $1,560, and he owes his father-in-law $10,000. What is Claude's net worth? I'd like you to make a chart like this right here, in which you list off the assets along with the monetary value, as well as the liabilities along with the monetary value, and using the accounting equation that I just showed you, figure out the capital. Again, please take the time that you need in order to complete this chart, and pause this video if you need to. Your chart should look like this. The bank balance, home, and furniture are all assets as it's all stuff that Claude owns that has a monetary value. His mortgage, the unpaid bill, and the amount of money that he owes his father-in-law are all liabilities because it's items that he owes to others. It's money that he owes to others. Below you'll see Claude's capital and how much he is actually worth. Now what we're going to do is take this information and present it formally in a financial statement called the balance sheet. The formal way of presenting the financial position of a person or a company is through a financial statement called the balance sheet. The balance sheet is a financial statement showing the financial position of a person or a business. The balance sheet, just like any other financial statement, must be presented in a very specific way. If it's not, it will be considered invalid. Here's the balance sheet for Claude. It looks really similar to the chart that we just did. However, there's a title up at the top now. And you'll notice that capital has been broken down right here at the bottom compared to what we've seen before. So if I were to go back to our chart that we did for Claude, there is no title up here, and you'll notice the capital is down here in the corner. But now when we formally present this, we have now given our balance sheet a title, and we've given capital a section right off to the side. Also, you might have noticed this right here where it says total liabilities and owner's equity. You might have also noticed that your total liabilities plus your equity is equivalent to total assets. This relates to the equation that we saw way back here. Assets are equivalent to liabilities plus owner's equity. I'll explain why this is done in our next class and in section 2.3, but for now, all you need to know is that a balance sheet must have total assets being equivalent to your liabilities plus your owner's equity. They must balance. Here's another example of a balance sheet for Chris Turner. So again, this balance sheet is very similar to the last one. Same idea. There's a title up at the top, your assets are to the left, the liabilities are to the right, and owner's equity is right underneath, with your total assets being equivalent to your total liabilities plus your owner's equity. Now that you know what a balance sheet should look like, I'm going to show you how to create a balance sheet. The first thing that you must do is create the title. Your title is going to consist of three parts. The first part will be the name of the individual or the business. The second part will be the name of the financial statement. Since this is a balance sheet, you're going to list balance sheet right under it. And the third part will be the date on which the financial position has been determined. The second thing you're going to do is you're going to list off your assets. Your assets are to be listed in accordance to which they could easily be converted into cash. So since cash is already cash, that will be listed first. Bank will be second because it's easy to pull out. Then everything else will be listed in accordance to how you feel or what you think could easily be turned into cash. The second thing you're going to do is list off your liabilities. Now your liabilities are listed in order in which they're to be paid. This is determined by creditors, the bank, and yourself. And once you have listed each account along with their monetary value, you're to determine their totals. So for assets, you're going to total everything up, mark it by single underline, write down total assets, and then write what the total is. Same as for liabilities, you're going to mark it with a single underline, write total liabilities, and then give me what the total is. Then once you've figured out your totals, you're going to move on to the owner's equity section. Now you're going to have the heading owner's equity, and underneath you're going to write whoever the business owner or the individual or the company is, comma, capital. And then you will use the accounting equation, assets minus liabilities, to give you your owner's equity, which is this number right here, this 713. Now we're going to use the second accounting equation, assets equals total liabilities plus owner's equity, in order to ensure that our total assets are equivalent to our liabilities and owner's equity. So what we're going to do is we're going to add up our total liabilities with our capital, have a title or a heading called total liabilities and equity, and that should, once these two numbers are added, that should give you a number that's equivalent to your asset, to your total assets. Then you know that your balance sheet is in balance, and once it's in balance, you have correctly created your balance sheet. And another thing that you should know when creating balance sheets is that once you have your final totals, you must double underline your final totals. That must be done. If it's not, then your balance sheet will be invalid. So a couple of terms that you should be made aware of that we will be using throughout this course is called our accounts receivable and accounts payable. Accounts receivable is money that will be coming in by a certain date when others owe you money. So these are always going to be assets because they're accounts that you will be receiving. It's money that you will be receiving. Accounts payable is money that the business owes to others by a certain date. So it's money that we will be paying to others, and these will always be a liability. So these are just two terms that you should know as we move forward in this course. So that is how you create a balance sheet, and that is what balance sheets look like. Just to finish off, here are the steps involved in creating a balance sheet once again. So you're going to start with your title, which is comprised of three parts: You're then going to move on to the left side and work on your assets, then to the right side and work on your liabilities, and then the bottom right and you work on your owner's equity, ensuring that your assets are equivalent to your owner's equity plus liabilities.